Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. We're back for another episode of the Mortgage Broker Podcast. Today, this is episode 13. It's an important episode because this is the second episode in our PLP series, the Perfect Loan Process series that we actually outlined and launched in episode 9. So if you haven't listened to that one, I would highly recommend going back and then jumping into this episode. This episode will be focused on an overview of the lead consultation process, which is the first process of the Perfect Loan Process that we again, Derek and I implemented in our broker business with Thrive Mortgage Co. many years ago and discussed in episode 9. So looking forward to getting into this one. This one will be more focused, like I said, on just the lead consultation process and what that looks like. I'll kind of break it down here a little bit, a high level of the lead consultation process. So we're going to touch on how a lead is received and, the different variations of or the more common reasons or how we would see a lead received into our business and how we would essentially handle that, how we track leads and manage leads from a stage perspective, jump into the specific lead stages that we had in our business and how we essentially stayed on top of those. And then we'll do a bit of a script and an email example of what we're dealing with when we are intaking that lead and what that conversation and communication looks like. We'll touch on some of the staff responsible for part of this process. So again, constantly referring back to the PLP. And then we'll just touch on some of the future episodes that we're gonna have in this series. So speaking to the editor behind the scenes here, Paul, who you can't see or hear, he is going to make sure that there's a PLP tag on all these episodes so they kind of follow a theme and you can follow along. As you follow along through this, it should be very helpful from a perspective of potentially implementing this into your business. And the last piece I'll say on all of this is, this is just a way we perfected it in our business. You can certainly take bits and pieces of this and implement it in your own way through your own setup of staff and resources. So with that, we'll jump right in. Derek, let's just touch on this. How is a lead received, and maybe just discuss kind of this typical ways that we see that a lead coming in the door.
Yeah, we've definitely tried to groom people to refer to a general email inbox for the company so that everyone on the team receives that. And our goal is always to get in touch with that client right away, right? You think about service levels. If you're getting a call within 5-10 minutes of an introduction coming in, it looks really well to the client. And we got to keep in mind, we're in a sales industry, right? And at the same time as that client might have been referred to you, they're probably been referred to a bank, maybe even another broker. Right. So getting on that lead or that opportunity, that client opportunity immediately is the goal. Get in touch with them. A lot of times they might not even answer. Follow up with a text, right? Leave a voicemail. A lot of people don't listen to voicemails. I always thought, give them a call, follow up with an email, especially if there's a referrer involved in that introduction. Following up with an email saying, hey, Joe, I just left you a voicemail. Let me know when you're free. Here's a link to my calendar if you want to book a call, book a time that works for you. At least the realtor, the financial advisor, the accountant, the referral partner in that situation is getting acknowledgement from you right away that you've taken action to get in touch with that client. There's more that we'll talk about how to get this into your CRM system and workflows to ensure that follow-ups are there. But leads can come in so many different ways, and you're never going to train every single person, past clients, referral partners, whatnot, to inquire through a form or inquire through a general email. People will text you, they'll call you, they'll message you on Instagram, right? So just awareness of that. I know a lot of times in a broker's business, you can get, caught up in tasks and underwriting files and whatnot. I think that you got to look at priority of certain situations. And to me, a new opportunity, a new lead, especially from a referral partner, that's a huge opportunity. And that should probably take priority almost over everything else that's happening in your day. So just a conscious eye on all of these different forms of communication, right? You miss a call, text. Like I said, there's various different ways of getting that lead received. I think the most important piece, like I said, getting in touch with them right away and then getting into your system right away. Because as we all know, you might call that person, leave a voicemail, but if you don't have them in your CRM, it is way too easy to forget about them. And again, what's the repercussion of that?
Totally. And like we talked about this in the initial episode about, the role of the mortgage advisor and the mortgage advisor doing and spending their time on activities that are going to make them the most dollar per hour, be the best use of their time. And that is always, typically advising and selling. You should always be, talking to somebody about a mortgage or how to get a mortgage. And that's, with that, leads can come in, like you mentioned, through a call, text, email, Instagram message, what have you. When you have a team on your side and you're out and about, let's say doing your rainmaking activities for the day, you may be out and about and not able to fully address that right then and there. Getting into a practice of, like, let's say screenshotting that or just doing whatever you can to get that information to your team immediately so it can be brought into the system. And then that's where I'll just touch on the intake form that we use, and we're big advocates of the Blue Mortgage Group and the Zoho CRM because it was so customizable for our team and our perfect loan process here. And we developed an internal form that we built with the help of Blue Mortgage. That when that form is filled out, it's so again, like, let's assume you get the lead. It's sent it off to your AMA or whoever in your process to get it into the system. They're essentially filling out this lead intake form, and that lead intake form is connected to the CRM, creating a deal, creating the borrowers, attaching the borrowers to the deal, setting up tasks to follow up and stay on top of it, making sure that the proper emails are going out based on how and what stage it came in through the door, which we're going to touch on stages. Just setting up the file for success so it doesn't get forgotten about. Like, first and foremost, it's in the system, it's there, it's going to be handled based on, the accountability that the CRM is going to keep on all of us in the team with tasks and whatnot to ensure it doesn't get forgotten about and it gets addressed immediately. So that's we can't stress that enough. That's been one of the biggest things we always hammered home to our team. Get the lead in the door, even if, like, the lead intake form that we built is pretty robust. It does track a lot of data and information. But, even if you just have, hey, this is Joe Blow, the borrower, he wants to buy a home. Even if that's all the information you have, fill it in, no matter what, just get it in the system.
Yeah, and just back to the importance of timing. If you are out and about and you're busy, you're in meetings, if you have an assistant working with you or a colleague, there's no harm in having that person reach out to the client again, just to get in touch with them, saying, hey, I'm calling on behalf of Dean. He's in meetings right now. I wanted to make sure that we could get in touch, learn a little bit about your situation, just ask some very generic questions, and they could book a call with Dean in that scenario later that day, the next day, whatever time and day works for the client. So again, just the action of getting in touch with that person right away, even if it's not yourself, but booking a call for the mortgage advisor or the broker to have the more in-depth salesy type call.
Okay, so we track our leads pretty diligently, and we treated leads as their own pipeline entirely. So we looked at a lead and the journey of a lead different than a mortgage transaction. And what we considered a mortgage transaction, or in our system, we called it a deal. It becomes a deal once we have the application. That's when we start treating the file differently and it going through a different process and journey. And that's important to distinguish because staying on track with the lead stages, we have certain stages that a lead will fall in as it progresses through the lead journey. And it starts off with a lead received. I'll kind of just go through these stages and the description of each of these stages and right now. And then maybe, Derek, you can kind of outline and comment on where different deals would fall into these stages. So first and foremost, I'd say, like, the two stages out of all the stages we have that we would use most frequently would be lead received and then hot. So we consider a lead received as just really somebody that, let's say, a realtor introduced us to Joe, the borrower, in an email. There's been no contact with the lead yet. So they've made the introduction. We maybe reached out to say, hey, thanks for, reaching out, our templated email that would go back to that realtor and that borrower. We would classify that as a lead received because, again, back to the intake form, we want to get it into the system immediately. So we would identify that as a lead received stage because we haven't connected with the client yet, but we have been connected to the client from the realtor. So that would be considered lead received, and we would only move it forward to hot. We would consider a lead hot once we've actually connected with them verbally, or they've responded to the text
and sent the application.
Yeah,
to them.
and sent the application. So the actual defined stage is hot contacted, app sent. That's what we would consider a hot lead, and we would leave it in that stage for 2 phone calls and 2 email attempts. So we would want to ensure that we've had at least 4 attempts to move that forward to an app. So we have the first call, consultation call, it's hot, the app was sent, they're ready to move forward. We would assume that's hot after, let's say, 4 attempts of reaching out to get the app. If we haven't got the app, then we would be looking to move it back to maybe a cold lead because we've lost contact with them. They've maybe ghosted us. Maybe it's moving back into the long-term on hold stage because they've identified that actually I'm not ready. I got down payment issues. I got to save more money. I got credit issues. Maybe I'm losing my job or I'm not getting full-time hours. Whatever the case is, they've identified that it's going to be a longer-term stage. So we've moved it back to that stage. And then the last stage that we would recognize is 1 application received. And this is a very specific stage to our process and our system with Blue Mortgage. So 1 application received is really a stage that is based on automation with our system and workflows that we set up. So if a client fills out an application through Velocity, which is Velocity is the client application that we use for our business. Client fills out the application on Velocity, click submit. That would then send a trigger back to Blue because the 2 are connected. It would let Blue know that, okay, this client has completed an application. This deal is now moving from a lead to documentation collection. So a lot of our staff members that might be listening to this episode might be thinking like, what is 1 app received? That doesn't even make sense. It's a stage that we use simply for automation. So it really pretty much lives in that stage for no more than 1 to 2 seconds. And that is what triggers it to then move over to collecting documentation, which is the first stage of our deal process. So to just wrap that up, I'll just quickly go over each of those stages. So lead received, cold lead, no contact, long-term on hold, hot contacted, app sent, and then 1 application received. Those are the 5 stages we use. And to kind of wrap this up with a bow here, like long-term and cold lead. So as leads start to get pushed back into those 2 stages, those essentially become pipelines that we can follow up with in the future through, like our role, like we talked about the director of WOW role, those types of marketing type roles or sales type roles. Those are funnels that they can go attack from a call list perspective. And maybe not so much on, like, these are probably the lower level. As you'll see, we go through this journey, you'll see the different on hold stages we have and why. These are probably the lowest level of priority from a call perspective. But I can tell you one thing, these people are certainly getting marketed to through our email communication and all of our campaigns from that perspective. So they are good buckets of opportunity in the future, and they're certainly it's just putting emphasis on you don't want to lose anything or lose sight of any lead, no matter where it is or how poor it was when it came in the door. It can always turn into something down the road.
Yeah, the only thing I would add to that is you touched on automation and tasks. So every single one of these stages, every stage in the entire process, which we'll talk about a little bit as we work through this PLP series, but every one of the stages that Dean just mentioned, as soon as it triggers that stage, a different series of tasks are issued to specific team members on the file. So lead received, it would trigger the mortgage advisor and the associate mortgage advisor to ensure that we're following up and getting a call booked with that client, right? Cold, no contact, that's triggering a task so that the team goes in and updates notes. Why has this gone cold, right? How many follow-ups have we done? And it's also triggering a task for a future follow-up so it doesn't get missed. Long-term on hold, again, tasking the advisor, associate advisor to add the notes. Why is it on hold? Why is it being placed on hold? And then a task to set a follow-up in the future, right? So there's automation here to ensure that nothing gets missed. And we've talked about this before and on the last episode, but everything that we've done in this CRM was to avoid mistakes or miscommunications or lack of communication. So essentially over communicating, over tasking with multiple people on the file, you really can't go wrong.
Yeah, and we touched on this in episode 9, just like where the breakdowns occur in the perfect loan process is typically communication or lack of communication within the team. And, Derek just touched on like automated tasks that are being generated at these stages. Yes, there is, but also in a lot of cases, these automated tasks are more so to keep the staff member accountable to do the right thing from a perspective of giving enough data, information on what's going on. Because as an example, you can set an automated task for a long-term lead to touch base in a month. But if that client told you verbally, I'm repairing my credit, it's going to take me a year, might not make sense to reach out in a month because you got an automated task. So the automated task would more so say, hey, what is this client situation? Did you note it? what is the follow-up strategy? So then you can then go plumb in a manual task. Okay, hey, this client told me they're going to be getting an inheritance in 9 months. Reach out at 8 months to check in on how that's going. So there is always going to be a level of human interaction with the system that's important, and you can like automation is great. What we've definitely learned throughout this system is like the human element is important too, to not just be so robotic and just get too automated, right? So that's something we talk about quite a bit. Okay, so just moving forward, I'll just quickly touch on like what it looks like when a lead comes in the door. Essentially, like to Derek's point earlier, like he mentioned on the ways that you could receive a lead, and ultimately like the main priority is to just get in contact with them, whether it's you or a staff member, to ensure that they know we've reached them and we are going to get a call booked with the mortgage advisor, Derek in this case, as soon as possible. Once that is done, then essentially what's happening is the lead intake form is being completed. The lead intake form is also a guide towards the entire lead consultation call or discovery call that you would complete. And once the discovery call is completed, that is the most important piece of the lead process, is to complete that discovery call and complete the full notes on what's going to happen, because this is the pure foundation of the file going forward. If the notes aren't super dialed and there hasn't been a very detailed discovery call completed, once this deal moves along the journey and it finally does get to review, which we'll touch on in later episodes, your underwriters or your loan specialists are going to be very confused on what the heck is going on. So these notes are very, very important. So after these notes are done, then again, it's back into that follow-up process, and we're just hoping to get an app and move it forward. So it's there's not a whole lot going on here, but the pieces that are occurring are crucial, like absolutely crucial. It's like the best example is like, you build a house and you build a foundation out of bricks opposed to concrete. Like there's an ability for error down the road. The foundation is everything, and this is essentially the foundation of the file. So with that, we'll touch on a bit of a script and email. I was going to put Derek and Jason on the spot and do some role play, but they aggressively refused to do that. So yeah, we'll let Derek take this away in the way he wants to do this. So we're going to go through a script and some email examples.
Okay, so Jason's a new client that's been referred, and again, immediate action is getting him on the phone, right? So I think the first thing you always want to bring up is like, this doesn't need to be a half an hour, 45-minute call. Always reference this is only going to take 10 to 15 minutes, and we're going to have a much deeper call once we have your information, right? Like set the precedent from the very beginning that this is just an introductory call to learn a little bit more about your situation, explain our process and the hoops that you're going to have to jump through, and we're going to have a much longer planning call to go through qualification, interest rates, and the outcome of your application. So starting off, like, you got to let people talk is what I've always found in these situations. Try not to take control of the conversation too much. Like, you have to walk them through and ask the right questions, but let people talk, right? So at the beginning, I would always reference, tell me a little bit about yourself and your situation. Like, what do you have on the go, and how can we help you? Over to Jason.
So I'm a first-time home buyer. My wife and I are looking to buy our first property. I've been renting for the past 5 years, but we both have steady salary jobs over the last 3 years, and we're looking to buy our first place.
Okay, perfect. Well, I'm glad that, our past client, Robbie, was able to get us in touch. And I guess first off, do you guys have a realtor, and how far are you in your mind in this process? Have you guys started looking at properties already? Have you spoken to your bank? Am I your first conversation?
We do have a realtor that we've been working with, and he's kind of shot us a couple of listings that we're interested in. Not entirely sure what our budget's going to be. We've talked to our bank, but don't have a lot of detail yet. So kind of at the initial phase.
Okay, great. Well, I would reference, I probably wouldn't put too much time into the property search. Like, it's definitely good to look online and wrap your head around the market and pricing and whatnot, and have a goal of what you want to buy. We want to go through this process thoroughly and talk about qualification before you put too much time and energy into actually viewing homes, because qualification can change as we work through this process. First, I just want to touch on who is your bank? Who do you work with, and what did they like? Did you go through qualification? Did you give an application, full documents, and where did that land?
So I bank with Scotia. That's where all my accounts are. I did speak to a rep within the bank who has referred me to somebody, but they didn't get back to me very quickly. So I'm pretty new to what I'm going to qualify for.
Okay, fair enough. Well, we're going to go through a very thorough process here, and it might seem a little bit invasive, but we do have to ask all this. And believe me, it's not us that necessarily want to do this to you and make you submit documents, but the banks are going to need it, and we would rather get all that information up front for two reasons. Number one, we don't have to bug you 10 times throughout the process. Number two, we don't want to make any mistakes, right? A mistake in a mortgage application can be pretty drastic when the time comes and you found the perfect home. So, okay, perfect. And just for reference, Scotia is one of our largest lenders and we have a great relationship, and we can often get, quicker turnarounds and sometimes even better rates than you can through the branch. So if that's where you want to land, we can definitely help with that. Okay, so perfect. So you guys are first-time buyers. You guys are looking to purchase your first home. Do you guys have a timeline in mind?
We're looking to do this within the next 3 to 6 months.
Okay, sounds good. Tell me a little bit about your income.
We're both on salary. I got a bit of a raise mid last year, but both consistent income on salary.
Okay, do you guys have any other income in the household? Like, do you guys have kids? Do you have CCB income from the government?
We do, yes. We have 2 young kids and CCB income.
Okay, perfect. Any other streams of income that we should know about?
No, we don't.
Okay, perfect. Down payment. Do you guys have a rough idea how much? And keep in mind, this can change as we go. Sometimes you do adjust upward or downward, depending on situation and qualification. But do you guys have a rough gauge on how much you think you'll have available?
Yeah, we've been pretty fortunate to accumulate over the years. And I think we're probably, depending on the purchase price, we want to land around that 20% down mark.
Okay. Can you dollarize that for me?
About $100,000.
100,000. Okay. So that would land you in the $500,000 marker, in and around there. Okay, so just back to you guys have been looking a little bit at the market. Do you kind of have a price point in mind that you think would work for your family? Is 500,000 kind of that number based on what you just said?
Well, we might have a bit of option to get some more money. I know it's expensive out there, so we do have potential to get a bit of a gift from our family if we have to budget up. But we would like to look at a house instead of a townhouse. So if we have to make some numbers work, I'm sure we can go to the family for some sort of a gift.
Okay, so what we'll do when we run the numbers is we'll just show you your maximum based on a 20% with no limit. And then once you guys have a better gauge on down payment, we can scale it as we need to. Credit. Do you guys have a rough gauge? You probably don't know your credit score, but do you guys have a rough gauge on your current credit situation? Do you guys have any debts, car loans, credit cards? And have you had any past credit issues that we should be aware of?
No past credit issues. I think we've been pretty clean with our credit. I don't know my score, but I've got to assume that it's pretty good. My wife has small amount of student loans, but other than that, not a lot of debt.
And you guys have been renting for a while, which is great. Are you guys tied into a tenancy agreement for a term?
We are. We're coming to the end of it. That's kind of right around why we're talking about that 3 to 6 months.
Okay, so you'll want to make sure that when you come up to the end of your lease, try to go into a month to month, right? So you're not stuck into anything. Okay, so we've talked about the overview, your situation, timelines, income, down payments, credit. There's no existing property in the picture. Potential for gift, which is great. You guys are first-time buyers. There are some first-time buyer exemptions, benefits. We'll talk a little bit more on the planning discussion. But if you guys do end up buying in that $500,000 range, you won't pay any property transfer tax. That's one thing to consider as you do scale up. First-time home buyer or not, once you hit a certain threshold, there is property transfer tax payable. So we'll want to account for that in addition to down payment. We get this question all the time, and you can't roll any cost in when you're purchasing, right? So that'll be something that we'll account for, and we'll break that down for you pretty precise once we get to that planning stage. Okay, so I guess just last piece, and this isn't a deep discussion right now, but do you and your wife have life insurance in place?
We do not.
Okay, so that's something that we'll talk about as we go. I mean, it's very important, especially with you guys having kids in the picture now too, and taking on a liability like a mortgage, call it $400,000 or $500,000. That's something that you do have to account for. So I know it's a conversation not a lot of people like to discuss, but I just want to plant the seed now, and we'll talk about that a little bit later. We do have a really good insurance offering for mortgage insurance through Manulife, and then we can also talk about potential referral to a financial advisor. So just last piece, I'll kind of explain our process here. So essentially there's 3 steps to getting you to a pre-approved stage. The first 2 are in your court completely. We're here to help, but the first one's an application which can be done online or over the phone if you guys prefer. Online is very easy, and I'm going to follow up after our call with an email that has a link. Click the link, it'll bring you to the portal. It'll take you guys 15 minutes to fill in your information. We tell everyone this, don't stress it. It's going to ask you for your incomes and asset balances. Like, try to get them close, but you guys don't need to do any math. You don't need to calculate your 2-year average. essentially get the application done, 15, 20 minutes. From there, you're going to have to send in documents. So you'll get a nice clean list, but on a high level, 2 years of T4s, job letter, pay stub, ID, consent form, bank statements for down payment. And based on all that, we can get your application underwritten. So again, don't stress the application because we're going to go in and tweak the numbers to make sure that the numbers that we're using are numbers that a bank is going to accept. Sometimes we can use a 2-year average. Sometimes we use the current salary based on the raise that you just got. So application, documents, from there, you're hands off. Give us a couple days and we'll be doing a full review, following up with an email that outlines your whole situation just to confirm we haven't missed anything. And then we'll be booking a planning call, which is usually about 30 minutes. And we'll kind of walk you guys through, in the eyes of a lender, how your income looks, how your credit looks, qualification. And at that point, we can start to tweak and adjust. And sometimes at that point, if everything's good and you guys are happy, we'll be sending you a pre-approval. Sometimes it's not exactly what you expected, or you're having a deeper discussion about gifts, and we'll take that away and then we can revisit to redo that. But the goal is to get you guys pre-approved so you can get out looking for a home as soon as possible. Right? Any questions on that?
So should I wait to get that pre-approval before I go look for the house?
Definitely. Yeah. Because like I said, you guys could spend a lot of time. Your realtor's going to spend a lot of time, usually evenings and weekends, which I know is tough with kids, only to find out you don't qualify for that level of home. So it's better to start off with this, get your number, and then get out there. It just kind of sets the expectation a lot better, right? So, okay, so I'm going to follow up with an email in a couple minutes. If you have any questions, let myself or our associate know. Last piece is I just want to reference that I have an associate, Joshua, that's going to be supporting on this file. He's going to be involved. He's going to help you. He's going to be following up to make sure you guys have everything that you need. If you guys have any questions on the application, any questions on the documentation, let us know. A lot of times, if you guys can't find tax returns and whatnot, we can help. We can work with an accountant if you have one. So anything we can do to make this process easier for you, we absolutely will. And just last piece, we do try to move things along as quickly as we can for all of our benefit. So again, I know this is something new for you guys. A lot of times people like to push things to the side when it's new. Don't stress it. The application can be tweaked. Even if you do it wrong, we'll update it. If you can't find documents, like I said, typically we like to get the application within a couple days. And if all goes well on your side and time permits, we like to have the documents within a few days as well, so we can move this along quite quickly.
That's great.
So just to jump back in here, I mean, like, yes, Derek made a good point. Like letting the client talk is obviously important, but like the one thing he subtly did throughout that conversation is he definitely did take control in key moments. Throughout that conversation, was able to gather an overview of the file and exactly what is going to be going on there, and their high level situation. Was able to confirm timeline, income structure to a point of like, what do they actually do for work? We now know these people are salaried employees. Touched on the down payment, credit. Realize that there's no existing property because they're first-time home buyers. Touched a little bit about the new property and some of the advantages of buying a new property as a first-time buyer because it was confirmed they were a first-time buyer. So throughout that, like, these are notes that are being taken as he's talking, which is key. And like, again, back to the foundation of the file, that's what's being built throughout this conversation. Some important notes were left for the loan specialist, which would be the underwriter doing the review in regards to just things that to keep an eye out for, such as down payment, such as being a first-time home buyer. That's obviously important to note for the person that's going to be picking up that file to review. And then, most importantly, like timelines were hammered home. And then also a key introduction to Joshua, the AMA, that's going to be assisting with the documentation. So making sure that, the client's aware of that individual. Something we'll touch on later on, especially in the planning session, is the fact that Jason, the client, mentioned that he has a spouse, and the spouse is going to be involved in the file. We find it very important to ensure that you talk to both people involved in the file. A lot of times, and a lot of our mistakes earlier on in our career was around where maybe we were just only communicating with one borrower opposed to two. The main reason, one, is not just disclosure and ensuring everyone is aware of what's going on in a file, but what we found is a lot of times there's one individual involved in the couple that could be far more outgoing, or far more of an extrovert type personality, far more likely to refer you. And typically the person that kind of takes the reins in the couple on the actual financing procedure may be that, the more introvert, more organized, controlled individual that has all their ducks in a row and is going to move the file along, but might not be the person that you necessarily want to build that refer type relationship with. So it's very important to build a rapport and relationship with both borrowers, and that's something we'll touch on later on in the process. This was touched on throughout the lead call that Derek had, but just in regards to the staff members responsible in the process. And so in the PLP that we created, there's the mortgage advisor, which is what Derek was in that call. He is the lead advisor. He is the one going to be providing advice throughout the process. And then the AMA, which was Joshua in that example, who is going to be the one following up for the documents, collecting the documents, making sure everything is moving forward to get to review. So that's pretty much it in a nutshell. I think we pretty much touched on everything there. It was a thorough lead call. You kind of understand how that flows. And, even though it just seemed like a conversation from the outside, it was actually a very structured, detailed conversation that followed an important flow.
Two things quickly, and then we can move on. Number one, make it sound easy. Like, make the process sound easy to the client. Because if you scare the client, say, oh, you got to fill in this really nasty application, and then you're gonna have to send in all these documents. Like, it really is easy, right? Like, it's an easy process, and collecting documents is typically not that hard. Obviously, depending on the client situation, it can be more convoluted, but make it sound easy. Let them know you're there to help them. Let them know you can work with their accountant. Like, give them every tool possible to make sure that they're leaving that call going, okay, I can do this application right now, right? Like, that's how things tend to move a little bit quicker. And then Dean's touched on a couple times the importance of these notes for when your underwriter picks it up. Even if you don't have an underwriter, if you had that call and maybe it takes a month to get the paperwork in, as we know it does oftentimes, you're going to jump into that file and forget what they're looking to do. You're going to forget what their price point was. You're going to forget what their ideal down payment was. And now you're underwriting from scratch, going back to the client, having this same conversation. Like, that next planning call, which we're going to do a detailed podcast on, that should be just giving them information, making sure the information is correct, and trying to get that to the next stage, which is pre-approved.
The one last thing I wanted to follow up on is, like, you mentioned that you're going to be following up with the application link in an email. Well, that's a very structured, templated email that is populated through our CRM. In addition to that, he mentioned that Joshua is going to be involved. Well, Joshua is going to be CC'd on that first email that goes out to them with the application link, with an additional brief description on who Joshua is and a reminder of what Joshua does on the file. In addition to that, Joshua, the AMA, would have a follow-up email after that, further explaining who he is, reaching out to create the connection. A lot of times there'd be a bomb video or some sort of video in that email to show them that this is a real human being that's going to be reaching out. So again, there's a rapport, there's a relationship being built. Also, I want to touch on these two roles that we're talking about, the MA and the AMA, Derek and Joshua. These are the only two people that will ever talk to that client throughout the journey. And then back to Derek's point, if you're a one-man show and you're thinking like, well, how am I going to implement this? I don't have staff. I'm not going to get staff. Back what we mentioned in episode 9, build your process and you own each role. So obviously the way you communicate about who does what is going to be different because it's going to all be you, but still structure your business where you're operating in each of these roles. And to Derek's point, setting up notes so when you get to the deal 10 days later, when it hits review, you know exactly what you talked about on that first call because you did a detailed intake note process. So going forward, this is now essentially the first leg of the process that we've covered with the lead consultation and intake. The next episode that we're going to be touching on as part of the PLP series is the document process and the review process. So the pre-review of files and ultimately, that entire process of collecting documents. The next episode that we're going to go through would be the review stage and the review summary and the strategy that's being completed there from the underwriting side of things. Then planning session and strategy session that the mortgage advisor would take with the client. Then we're going to touch on live deal to approved and everything that's happening there. And then wrap up with broker complete to funded. So that's how we're going to go through this. And once this is all wrapped up, we'll have a very detailed library of these episodes and the videos that you can kind of come back to and watch and hopefully learn and implement some of this stuff into your business. Lastly, I just want to touch on some listener questions. And one thing that you might have noticed in that call is, and we've talked about this a lot, this is a hot topic in our industry, but rates. What's your best rate? Everyone's concerned about rates. Rates are high. Rates are, a concern. Rates didn't actually come up on that call, and that maybe wasn't intentional. Rates do come up. The question about rates do come up, but when you take control of the call and you properly pull in an intake, you're showing the client confidence that you're doing what you need to do. You're gathering the information you need to effectively get to a point of being able to discover rates and talk about rates when you get there. But maybe Derek, you can touch on this. I know we've talked about this in the past, but like, do you talk about rates on the first call or lead consultation with a client? And if no, like, how do you avoid getting into this topic when it is brought up?
Well, it does get brought up all the time, but I think like with the call with Jason, one of the first pieces that we talked about is, have you applied somewhere else? And he brought up that his bank had. And my next question was, have they given you a quote? Have they given you qualification? And most times, if someone has been offered a rate, and this is very important, very much so right now, but always, if he goes, yeah, Scotia's offered me this, right away, most brokers are going to know if you can compete with that. And if you can't, don't waste your time, right? Like, don't go through this process. Don't get the application. The only reason you would move forward is if Jason's saying service sucks, rate's good, or we tell him that the rate's competitive, it's in market, it's fair, but Jason's not getting the qualification that he wanted. At that point, it's probably still worth looking at it to see if we have a different lender, different program, different product that can get him to where he wants to be, regardless of interest rate. So rate comes up all the time, right? Because it's in everyone's face right now. It's not a bad thing to talk about rates. Like, you can't beat around the bush about it. I think the point of it is just saying, hey, roughly, this is kind of what we're looking at right now. Based on your situation, 20% down. A lot of people are going with the 3-year fix. This is kind of what we're seeing, but it depends where you qualify. Depends if we need to use a lender that's going to, extended ratios. So there's a lot that goes into that conversation. So I can't give you a proper quote today. We have to go through this process. And on the planning call, we're going to have a deep discussion about different lenders, different rates, different products. Find something that works for you, right? Based on your situation and your long-term plans with this property. You got to kind of leave it open-ended, because it does tie the client into like, okay, like now I have to do this work. Like, I have to do the app. I have to do the docs because I do want to talk about rates. If you quote a client a rate up front on that call and then send them the app, they're probably going to go online and go, oh, actually, you know what? There's someone else has something better. I'm going to do this process with them.
Yeah, well said. And like, as we go through the approach, like, it is very much an educational and advisory type approach, even from like the very first call throughout, showing your value from that perspective. Also, as we go through, you'll learn that, we're treating this client as a client for life. And those are, different strategies that you can come into play when, it comes up with rate and banks, and the fact that, we are going to be here as your advisor for essentially, as long as you're going to have this mortgage, depending on your age and term in this industry. But we'll touch on that in future episodes. So I'll just wrap up here. I mean, we had a bit of a conclusion on the episode and what's to come for future episodes. I will preface that, like, we will be embedding other type of episodes throughout. These won't come out in sequential order. Like I said, the first episode of the PLP was episode 9. This is episode 13, which is essentially the second episode of the PLP series, and we'll continue to kind of work in that order, and things will come out as they come out. We do have some cool new episode ideas that are in the works from a planning perspective that are going to include some top producing brokers. Last episode, you would have saw the interview with Pierre, with Derek and Jason from Home Trust. We're going to have more behind the lender type series, and that's actually based on your feedback and your suggested topics. So with that, if you have any feedback or suggested topics for us, we're all ears. Like, we want to hear it. So please give us that feedback. We're looking for it. And like, last but not least, if you are enjoying this content, please share it. Share it to anyone that you think would benefit from it. And if we earned it, please give us a 5-star review. It means the world for us. It's why we're doing it, right? We're doing this to give back and ultimately share and make our industry better for everyone. So with that, we'll wrap up, and thanks for listening. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddy steps in to support these vulnerable children, ensuring they have easy-to-prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one.